Also watching Lyft shares higher in pre-market trading, but of course they've pulled back significantly after soaring more than 60% on a clerical error. The ride-hailing company's original release stated it was expecting profit margins to expand 500 basis points before correcting this to 50 basis points during its earnings call, saying this was a clerical error. Well, for more on these results, we're joined by Dan Ives, Wedbush Securities Managing Director and Senior Equity Analyst. Good to have you on, Dan. So in terms of your reaction to this accidental typo and the reaction that we saw in the markets here, I know you've had some choice words about an error like this. Clearly, it has to pass through a lot of hands. A lot of eyes get to see these things before it goes out. What does this signal to you?
Look, this was a Ted Stryker airplane moment. I mean, if you look at this, it's a black eye for Lyft. And even though these were good numbers and a step in the right direction, look, this has really been a comedy show the last few years. And it's just another, I think, credibility issue, that we've seen. Again, just a shock and never seen anything like it 25 years.
Does that credibility issue impact the invest worthiness of Lyft from your perspective, Dan?
I mean, if a pilot lands in the wrong airplane and he lands and then all of a sudden he lands in the wrong destination, do you question that team? I mean, look, that's the fundamental issue. And then at the same point, you have Uber, just another flex the muscles moment. Look at what's happening there. I mean, now obviously a buyback. Lyft continues to be the little brother of Uber.
And so, Dan, with that in mind, obviously Lyft still pushing back on expanding in the way that Uber has in terms of expanding its services, staying this pure play. What do you think is going to be the key then to become perhaps a bigger brother than it already is, especially when you look at things like some of the partnerships it has?
Yeah, I mean, look, partnerships. I mean, you look at autonomous, you look at some expansion into some other areas, but the fundamental problem is that they have to expand margins. Obviously not 500 bips, 50 bips. I mean, it definitely feels like they're in that direction. They got to prove it. This can't just be a one step forward, two steps back. They have to execute. It definitely was a step. But look, this is also overshadowed by almost a historical error, in terms of what we saw. So this is going to be another prove me. But at least for now, they're going to be at the little kids' table at Thanksgiving.
And so all of these things considered, I mean, we're taking a look at some of the moves here over a more extended period of time. As you kind of consider the outlook and how consumers are continuing to engage with both of these companies, is there anything that you can extrapolate from one about how they're engaging differently with this current consumer and retaining market share as well as perhaps stealing some away?
Yeah, Brett, I think Uber has actually been gaining market share, peak rides, gaining market share from a driver perspective, profitability increasing. I mean, it's a clinic. This has been a comeback story. Obviously, Zuckerberg and Meta comeback story for the ages, but this is kind of 1A. If you look at what they've done. Lyft, confined, right? Domestic. You don't have food delivery. So there's just not that many levers they can pull, and you guys show profitability. They've had a lot of, turnaround in terms of changes from management team. And now you have we'll call it a clerical error for the ages.
And Dan, they do still have forecasts of better than expected bookings. They expect to be cash flow positive in 2024. What is the base case that's going to get them there?
Well, I think it's more profitability, but, you're starting to see some cuts that they've done pay off. Promotions. Ride sharing overall has been a massive tailwind. We've seen that with Uber. But this can't just be the boy that cried wolf, right? In other words, you need to actually execute. And that's been the issue here. One step forward, two steps back. So investors, you'll see obviously, strong move today, which they deserve, but to really start to see long-term traction, they have to execute. And they're in the shadow of Uber with another Mahomes-like performance and, now a buyback that they just announced.
Yeah, exactly. And so, Dan, for Lyft, I mean, David Risher, he's been in this role for less than a year at this point. How much time, how much of the turnaround strategy do you think investors are going to be continuing to kind of give that leeway, that, ultimate amount of time for them to see a turnaround?
Yeah, I think by the end of 24. If not, then the alarm bells ring, right? And look, he's done a good job coming out of the gate. but you have a year here. But also, it's our view. We're in the midst of a new tech bull market that we see going on, through the end of 2025. So Lyft sitting there in a minivan going 35 miles in the right lane, and then the left lane, you have not just Uber, but the rest of tech led by AI, Godfather of AI, Jensen, NVIDIA, and others. So I think that's the issue: is that there's time is not endless here.
Dan, just quickly, what does Lyft need to do to make sure that they don't miss out on that next tech bull market?
Well, I mean, look, they've already made a lot of strategic mistakes. I think right now they have to expand from food delivery. They have to go after autonomous partnerships, strategic, a lot of options on the table here, but you can't have hubris.
Dan, great to speak with you as always. Thanks so much for joining us
Thank
this
you.
morning. Good to see you.